Hi everyone, and welcome to my first video on VDY, Vanguard FTSE Canadian High Dividend Yield Index. It's one of the most popular diversified Canadian dividend ETFs in the market, and in my opinion, it's in its category, it's one of the best available for Canadian investors who are looking for an income stream and at the same time possibility of growth. So what's VDY? VDY basically is a Canadian dividend ETF. It invests exclusively in Canadian companies. So when you're buying VDY, you are investing in a couple of a bunch of businesses that are located in Canada. And we will see like the VDY is basically a passive ETF. It means that it's tracking an index. And the index in this situation here is FTSE Canada High Dividend Yield Index. We will discuss this index more in depth. So basically, when you are investing in Vanguard Dividend ETF, you are putting your money in the Canadian economy, in the Canadian businesses that pay high dividends. So it's considered to be medium risk. So if your risk tolerance it should be medium to high because you're still investing in stocks, so it could go up or down. And the dividend there is for investors who are looking for an income stream. It does pay a monthly dividend, which is great if you're looking for a monthly income stream. And so concerning the FTSE High Dividend Yield Index, why you should always look when it's a passive ETF, you always have to dig deeper to understand what they are tracking exactly, so you know the quality of stocks that they will invest in. As you know, ETFs they are invested in a portfolio of stocks. So by buying one ETF, it's like you're investing in a bunch of stocks at the same time, and you're getting the average return and the average dividend minus the fees for the ETF itself. So the FTSE High Dividend Yield Index basically invests only in Canadian businesses that we know already. And here it gathers data on the 12 months forward dividend yield using a system established by the Institutional Brokers Estimate System. And it's provided by Thomson Reuters. So they look at the forward dividend yield. So they kind of target the dividends that are coming up, and they will exclude all stocks that forecasted not to pay any dividends. And they will establish a ranking based on ratios and screen periodically for liquidity. It's important that they screen for liquidity because you don't want to end up with stocks in there that are not liquid. And as a manager, you of this ETF, it's better to have liquid stocks and not stocks that are barely traded and you would have issues selling or buying. And it's also important for us. It's one of the major criteria for buying an ETF. It's liquidity of the ETF itself and the stocks that are making up this ETF. So this is about the FTSE High Dividend. So there is some screening going on. There is ranking based on ratios. So it is a quality index. Now, in terms of, I'm trying to compare Vanguard FTSE Dividend ETF with similar ETFs that are also popular, and we have the iShares Canadian Select Dividend Index and the iShares S&P Composite High Dividend Index. You can see here in terms of asset under management, all of them are above 1 billion. So they are liquid ETFs. In terms when you want to buy them and sell them, the spread won't be huge because there's a lot of buyers and sellers when the asset under management is this large. The MER Vanguard is at the top with 0.21%. So the MER is the management expense ratio. That's the total expense that you pay to own this ETF. So you will get what the index had in terms of return and dividends minus this 0.21, which is really low comparison to iShares at 0.55%. Vanguard is known for offering very competitive products, and also they have experience in management of portfolios. The same with iShares. This is iShare here. For this category, they should, in my opinion, lower their MER to match the one with Vanguard. In terms of performance, this is for 3 years and 5 years. This is annualized performance. So it's, for example, 5 year will be 9.48% on average annualized for the 5 years. If when we compare the three of them, we see that Vanguard comes on top. When it comes to long-term performance, for 3 years, 17.20%, 17.2% on average for 3 years. For the 5 years period, it's 11.45%. This is really great return. It was helped VDY because why they have a great performance in part because of the selection of the index itself, but also because VDY is representative of the Canadian economy. They have a lot of banking and energy, and banking and energy has been doing great in the past year. So dividend ETF that are exposed too much to the banking and energy sector did well, and VDY is one of them. And in the 6 months period, we see here that the iShare Composite dividend index is a little bit ahead, but VDY had also a great performance. This is the long-term performance is as of March 31st and was extracted from TD Market Research, and the dividend yield is as of April 12th. And you see here that all of them pay almost 3.5% dividend yield. So with VDY, you're getting some growth here. You're getting excellent growth, and also the dividend that it's paid monthly. So why, in my opinion, VDY is on top of terms of diversified Canadian dividend ETF because of long-term performance, as we saw, it is higher for the long-term performance. In terms of allocation, the only thing you need to keep in mind that it's uh, heavy on banking on energy, with the same with the iShares Composite Index, and this helped them in the past year. So when you're building your portfolio, just keep in mind that you're holding an ETF that is heavy on banking and energy. So if you want to invest in something else, try to avoid replicating or duplicating what you already invested in. So with VDY, you're covered when it comes to banking and energy. You could buy a dividend ETF that's invested in another sector, or a company that's in another sector. In terms of the number of holdings, this indicates whether the stock is diversified, whether the ETF is diversified. XDV has 30 high dividend paying stocks within it, and VDY has 39. They are both XDV and VDY. They have the same volatility, but the performance of VDY is better. So for the level of risk volatility you're taking, VDY Vanguard one is, in my opinion, the best one. So yeah, so this is in a nutshell all the discussion regarding Vanguard Dividend ETF. If you have any comments, please go ahead. If you have any question, let me know. And if you know any other dividend ETF that you think could top Vanguard, just let us know in the comments. And thank you. And please like and subscribe if you like the content. I will post the link to my to the article with the full details about Vanguard, and also all other bunch of articles about posts and articles about dividend stocks and dividend ETF in wiseinvestors.com. Please make sure to check that. And thank you, and have a nice evening.